Welcome to Real Estate Exposed, helping people in San Diego buy, sell, and refinance their biggest investment, delivering you timely truths, exposing important issues, and helping you get into the right home. Here are your hosts, real estate expert Daniel Beer, top-ranked professional by sales volume at one of San Diego's largest brokerages, and his mortgage partner, Todd Pianin, with over $2 billion in funded loans.
Hey, San Diego, how are you? It is a dark and gloomy weekend. Not because of the weather per se, but simply the fact that we are void of our beloved San Diego Chargers. Today's show goes out to you. You're listening to Daniel Beer, Todd Pianin. This is Real Estate Exposed. Todd.
I have a question about this because I grew up in L.A., Dan. You grew up pretty much down here in San Diego.
Yep.
So you've had the Chargers pretty much your whole life. I've gone through so many football teams in Los Angeles that, you know, these guys leaving, and, you know, we had the Raiders, we had the Rams, we had everybody for a while. I mean, how do you, like, as a beloved San Diegan, how do you take this information? I mean, like, what does this feel like to you?
Look, this is tough. I was there pretty much for every home game from when I was 8 years old through this past season. I mean, that's a long history. I remember walking up to the stadium once we were in the parking lot, I remember walking toward the stadium to go find our seats for my very first game, holding my dad's hand. It was a Raider game, I remember specifically. I remember all of the misery of the late 80s into the early 90s, which all of a sudden got turned around when Bobby Ross showed up and we, out of nowhere, seemed to win the division. And then, of course, 1994, we made the Super Bowl. I remember having my face painted to watch the game at home.
You had your face painted?
Just to watch the game at home. I was a kid. You know, I was 13, 14 years old.
Right.
I remember it's a part of your life.
Right.
You know, it's a part of your life. It's my room as a kid was literally, you couldn't see the drywall, because every last square inch was Charger something, and most of it just newspaper cutouts and the power rankings, and we were number one. It was just an amazing time. And so, I mean, they're going to be missed. You know, I was there for Orlando Mare's missed field goal from, you know, when we played the Dolphins, and by some miracle we made it to the championship game, and the whole thing.
I mean, it'd be for me like the Lakers. I mean, I grew up with the Lakers. I grew up with Magic and Kareem. I grew up with with Kobe and Shaq. You know, so it'd be one of those things that I guess would just destroy me, I think.
And look, we're going to move on next week to a whole new topic. I hope you move on in general. I hope the other stations, the other just shows, the media, the news, the newspapers, I hope we all move on after today. But this is the end of the week when we lost our
Chargers,
our team, man, and it's a big deal. But here's what I want to see next week.
Well, here's my question. Don't jump away yet.
No,
I got a question.
I'm not jumping away.
I want to ask about how does this affect real estate? Because there's got to be a correlation here. Because I mean, there was a proposal on the table that Qualcomm was going to get turned into homes, right? That land was going to get turned into homes for the new stadium. So we live in one of the finest cities in the world, and we are real estate exposed. We're losing our NFL team that you've had your whole, you know, child and adult life is now moving to LA, and we have no football team now. That's right.
And if you're just joining us now, you're listening to Dan Beer and Todd Pianin. Number's 800-676-2420. Well, I don't know what it means for the future of real estate in those locations. What I do know is we're suffering a massive opportunity cost of what could have been. Mm-hmm. What should have happened there, and what will no longer happen. If imagine taking just look at the effect. Okay, this is something I was thinking today as I was driving over here to the studio. Think of the effect that Petco had on the development of downtown San Diego.
Huge. Turned it around.
Everything, okay?
Right.
And so here's what I really don't get, if we're still looking backwards here. What I don't understand is this isn't we're not going in blind to this. If we'd actually had a stadium and a project and the development and the restaurants and the bars and the condos and the hotels, none of that is an experiment from zero. We've actually already lived it, already seen it. We've seen what investing those dollars into a stadium has done for our city.
Right.
And there's so many intangibles, from the blood drives to the charity events to
having those celebrities, having those football players as celebrities in our town.
Just people that, and why? But why is that important? Because those are the folks that visit the what is it worth to the city to have a Charger, a popular, beloved Charger, visit the Children's Hospital?
Huge.
Maybe in the oncology section,
right?
In terminally ill kids. What does that mean? How do you value that?
Yeah.
There's so much loss beyond football. Football is actually the least important thing that happened here.
Agreed.
There's so much more behind it. But here's what I want for us moving forward. After today's the last day for us to commiserate. And moving forward, let's put our energy into attracting a team with ownership that is far superior to what we experienced, that's dedicated to being here, that wants nothing more than to be in San Diego, and attract them. And as much as I don't want to go poach another team from another city around the country, because I know what it feels like,
right?
That campaign needs to start Monday morning.
Well, it probably already started, right?
We got to go.
Aren't there a lot of? You're more plugged into this kind of stuff, but there are teams out there that are looking to move. Besides,
oh, absolutely, there are. There's so two of them. The most obvious, of course, is the Raiders.
Yeah, which we get one bad owner to another bad owner.
It'll be interesting to see what happens there.
Right.
Even though they've been pretty focused on the Vegas market or potentially staying in Oakland.
Right.
Now, the other struggling team, the Jaguars, the issue behind that is they actually have one of the richest owners in all of sports, not just all of football. So he could afford to stay in Jacksonville despite the market.
Right.
We'll see how that turns out. You're listening to Real Estate Exposed. We're still a phenomenal city, and we will attract a team that becomes ours and that is committed to us as much as we are to them. There's one of the biggest announcements that we need to share with you. Moving on to real estate.
Can I do a drum roll?
I don't know if you could hear that, but all right.
Drum roll. Sorry. Huge announcement.
Our home selling workshop curriculum has been an absolute hit. What people have been able to do with their homes, the equity they've been able to extract out of their property, the headaches that have been avoided, the professionalism that's been implemented into the home selling process across San Diego County has been so well received that our curriculum has been is what is used at the home selling workshops, and they're back for their 9th edition. They are returning once again, and February 1st is the date, my friends. It is always you that we want to tell first. So many of you who we've been able to share this information with and have it implemented in whatever way you feel best. But here's the one thing for sure. You do not need to listen to this message. You could turn the dial, you can tune out if you consider yourself to be happy being among the masses. There's always the way the masses do things, and there's the way that people that get superior results approach life. Because you're here and not just listening to, whatever it might be, it's a teeny bopper station.
Smooth jazz.
Because you're here, we know you want more for your life.
Right.
And so the home selling workshop's coming back. And if you're like me, you are completely uncomfortable with your life in the hands of amateurs. So if you're selling your home over the course of the next 12 months, the workshop is the place where the trademarked 5-day Blitz program that's literally helped 187 families make their move last year is showing up. It's where you learn how to net upwards of an additional $62,000 more on the sale of your home and how to have it predictably sold within 5 days of going on market. And instead of doing what everybody else does, which puts the power in the hands of the buyer, you take it back, take control of the process, and professionally execute an easy to do, but it's not an obvious plan. though, as much as it should be, because once you understand the steps, it's clear there's just no better way to have your home sold. And we literally dial it out like bullet point, bullet point, bullet point, bullet point, tactical, granular, do it today information to approach your home sale professionally instead of as an amateur. Here's what you do. You get your free tickets. You claim them now. We always release them first to you, our Real Estate Exposed listeners. And you just simply go to SanDiegoWorkshops.com. That's SanDiegoWorkshops.com. You go there, you claim your tickets. It's offered at 12:15 or at 6:30 p.m. It's February 1st, so it's coming up. Get yours now because, of course, the tickets will be released to the greater public. The phone number, if you prefer to reach us by phone, is 800-676-2420. It is the same process we just used to sell a home in Carlsbad at $49,000, $49,000 above the asking price with multiple offers, including a cash backup. How do you do that? How do you do that instead of placing the power in the buyer's hands as is typical across the country?
Dan, how do you do that?
Well, the way you do that is by implementing the process that we literally bullet point at the San Diego Home Selling Workshops. Go to www.SanDiegoWorkshops.com. You're listening to Todd and Dan. This is Real Estate Exposed. Get your free tickets. SanDiegoWorkshops.com. Welcome back. You're listening to Real Estate Exposed. This is Dan Beer and Todd Pianin. Todd Pianin of Home Street Bank, along here with Dan Beer. That's me, owner of the Beer Home Team at Keller Williams. Keller Williams, #1 team in the region, and we are thrilled to be with you.
I have a funny story real quick.
Tell me about it.
We were doing a cross qualification on one of your deals, and I said I had to get information back to the Beer Home Team, and the agent who was the mortgage lender who was in Austin, Texas. I say that again, Austin, Texas. He goes, "What is a Beer Home Team?" And I'm like, "The Beer Home Team? They're the listing agents on the property representing the sellers, or the ones who are going to present the offers to your seller." I would think that you would want to know why you're talking to me on a cross qualification.
Hey, there you go. That's our amazing industry.
Sorry, I just had to throw that out there.
So, one of the things that strikes me about this market is that people are under the impression that anything and everything will sell. That
it does, right?
Listen to this, because
well, then,
look,
what do you mean? Listen to this. What are you going to tell us right now? Are you going to tell us something, a magical number that we don't need to know? I mean, we're only 12 days or 13 days or 14 days into the month.
And in those 14 days,
yes.
Okay, check this out.
Yes.
And you already know this if you've experienced the pain of an expired listing. You've had your home come on the market. You've had it come off the market. It's still there. You already know what that looks like. You know not everything is selling. Across the county, 573 properties have already gone canceled or expired, meaning they've come off the market, unable to sell. 573 properties totaling $1,199,000. Excuse me. 1 billion. See, I'm not even used to these numbers.
Yeah.
$1,199,722,764 worth of San Diego real estate has failed to sell in these first 2 weeks of the year.
I mean, I'm just going through the math in my head, but that's like 35 properties a day.
It's crazy, right? So everybody thinks that everything in San Diego, you just throw a property on the market and boom, it's sold. 573 failed listings this year alone. In fact, there's so many of them that the entire team, the Beer Home Team, on January 1st,
right,
while everybody else was at sleeping or at home or hungover,
right.
Well, we were actually at the office connecting with people that had just had their home expire and offering to help them with a much better process, because the reality is there's a better way to do things. But that number's striking. I mean, would you have guessed that to be the number?
No, I would have thought maybe 100, maybe 50. But 535 homes a day.
Let me put this in perspective for you. Let's take a look at what all of last year looked like. Over the course of last year, there were 13,461 failed listings across the county.
That's over 1,000 a month.
Isn't that amazing?
That's unbelievable.
And so these are homes, okay, an expired listing, a canceled listing. These are homes that are hitting the market,
but
sitting, and then not selling. And by the way, these homes are sitting on average over 88 days on the market before they finally just give up and come off unsold.
They give up and come off, or like their listing expire? I mean,
some of them expire. Some of them just simply say, you know what, it's been 3 weeks since anybody's visited the house,
okay, so
we'd like to cancel the listing.
Okay, so here's what I'm going to ask, and because I'm going to be the skeptic here. I'm going to play devil's advocate with you for a second, real quick. How many of these listings would you say? And I'm sorry to listeners out there who fit in this category, but were unrealistic sellers. What percent? I mean, just throw. I mean, in your years of experience, Dan. I mean, let's. I want to go besides the hobbyist who tried to sell it.
Not to answer your question without answering the question. It's what does that mean? What is an unrealistic seller? Is it the seller's issue of being unrealistic, or is it that they haven't had the guidance or the expert advice in order to have proper expectations as far as what the market could do? And was the market ever even presented to those homes? Or was it simply one buyer at a time, as is always the case,
right,
where one buyer at a time is handed the power of the sale and visits on a one-on-one basis, leaving the seller completely paralyzed of being able to make a confident move in either direction because all they're ever getting is the pricing opinion of individual buyers or the feedback of individual buyers. So how many of those sellers were unrealistic, Todd? I don't know how to answer that because there's a lot more. It goes far deeper than that. That would dishonor the home selling public of San Diego County because it is not up to them to be home experts and pricing experts and strategic experts on the home selling process. It is up to the agent they employ to offer expert advice, unfiltered truth of what and to be able to shape those expectations, to together put a strategy in place to bring the entire market to the property and have them fight it out against one another. And that is where a home sale happens. That is what you learn to do at the San Diego home selling workshops, which, by the way, if you want your free tickets, you just go to SanDiegoWorkshops.com. We've literally written the official curriculum that is used there. SanDiegoWorkshops.com. But that is a huge number, Todd.
That's a ridiculous number.
13,461 failed listings last year, and we already are upwards of 570 this year alone.
Right. It's ridiculous. It doesn't make any sense to me whatsoever.
Would you agree most people out there just think everything and anything sells?
I think once you put it on the market, I think it sells. I mean, at least that's what I see in my neighborhood. I mean,
so we're also listing a lot of the homes in your neighborhood.
That's true. But I mean, I guess the question is, as you know, this is just a lender who has been to, who speaks the home selling seminars, but has gone. We've always talked about Dan being the disruptor and what he's come up with. I really believe that you're doing yourself a disservice if you're one of these 13,000 homeowners that had a expired listing. You need to come and listen to the San Diego workshop, or
if you want to avoid being one. And by the way, the workshops are educational. They're for you to just understand what does it look like.
They're free.
And what does the typical home selling process look like, which results in 4 home sales a year on average per agent? And what is a home selling process that yielded 187 home sales in just 1 year alone, over $250 million in sales over the last 24 months? What does that process look like? And literally get the bullet points so that you could have it implemented. You just go to SanDiegoWorkshops.com. That's plural. SanDiegoWorkshops.com. Those tickets are released to you before anybody else. Get in on them before they're gone. The event is February 1st. It's coming up, and we'll be coming back as well. All right, we're back. It's Real Estate Exposed. Dan Beer of the Beer Home Team, Keller Williams, along here with Todd Pianin, Home Street Bank. I want to turn it over to you, Todd. You are you are essentially the economist of choice for my team. You present at the home selling workshops, sharing everything you know, which has been a blessing to the community. But there's huge news coming out in the mortgage markets as far as as it relates to FHA and how that is how accessible that money is to buyers. What's happened there, and what does it mean for the borrowing ability of today's buyer versus last week's buyer?
So effective January 27th, FHA, which is the Federal Housing Administration, is dropping their monthly MIP premium, which is their monthly mortgage insurance.
Why does a buyer care? What does this mean?
This means basically that your monthly payment goes down. So as interest rates have gone up, the buyer who bought last year on FHA, who's buying this year on FHA for the sake of argument, their monthly mortgage insurance that they're paying is going down roughly, just as an average number, about $100 to $150 a month. So
rates are higher. Does that essentially compensate it, evens it out?
It does, except FHA rates are actually really good right now. So, I would tell you that they're better than their conforming counterparts. But what this is doing is it's also allowing people, like we talked about last week, Dan. We talked about a lot of renters. Rents went up almost 8% last year. I mean, we're seeing the mortgage insurance premium go from 80 basis points a month to 60 basis points a month. You're talking about almost a 20% drop.
Explain what this MIP is. What is this?
It's your mortgage insurance. So you put
right. So what is it for? What does it do? And why does it? Because that's not conventional loans don't have it, correct?
They have MI. They don't call it MIP. They just call it MI.
Okay. So walk us through that so we could understand it.
So if you're a buyer and you're trying to buy a home and you're putting down less than 20%. The bank wants something to ensure the difference between a 20% down payment and what you're actually putting down. So a lot of there's a couple conventional programs out there. You can put down 3%, but they have what's called, income limitations. FHA doesn't have income limitations. So anybody can get an FHA loan. So a lot of times you can't get this 3% conventional loans. You can only your choice is really a 3.5% down FHA loan. But FHA does a whole bunch of, they have a lot more loose guidelines. People who've got some credit issues, or people that may have gone through foreclosure or bankruptcy or short sale, or mom and dad want to help and they want to co-sign on a loan, for somebody. We can combine the ratios. Or, a lot of people don't realize you could put down 3.5%, Dan, and you can buy a 4-unit property if you're going to occupy one of the units.
I'm going to give you the number out if somebody wants to reach you. We're going to keep going here. Mm-hmm. But if you need to talk to Todd about a loan or FHA versus conventional, the number's 800-676-2420. Okay, 800-676-2420. So, Todd, money's gotten cheaper essentially through the FHA program.
Correct.
Does it make sense for, I've always thought of myself as a conventional borrower. Mm-hmm. Does it ever make sense to do a 20% down payment, 25% down payment FHA loan? Are the rates that much better?
Veterans, yes.
For veterans,
FHA, not so much, because you still have to pay what's called an upfront MIP.
Okay.
So what that means is you're actually filling up the coffers of the mortgage. You're also helping create a reserve account basically for everybody else who's done an FHA loan. So not necessarily if you put down 20 or 25%. I would tell you it may not be the best way to go. It could be the best way to go if you've got credit issues or foreclosures or bankruptcies and that kind of stuff, and you can't get a loan conventionally. I've had some clients who've actually put down 30% and done an FHA loan because they had some credit issues and some credit dings, and they wanted to get back into the market before the jumbo market was there to help them in that process, or to come up with programs to do that kind of stuff. But I would strongly, for those of you who are sitting on the fence right now and thinking you can't afford to buy a home, this is unbelievable news. 3.5% down. You want your first property. You want to build a real estate empire. You can buy multifamily with 3.5% down from 1 to 4 units.
Multifamily,
1 to 4 units. You can put 3.5% down. So so looking at something, and it goes up to like $1.2 million purchase price, $1.3 million purchase price for 4 units. So you're talking about what's called $40,000 down. You can buy a 4-unit property.
So hold on, I could actually become I could become the landlord of multiple doors.
Yes.
have multiple tenants
Paying your
with
mortgage.
3.5% down,
Correct.
who pay my mortgage for me, and where if I'm buying the right property, they're also paying my expenses, my taxes, my insurance, etc. And I just have to find the 3.5%.
Correct.
So I just need to put together a savings plan.
No. It can be all gift. Mom and dad can gift it to you. Grandpa and grandma can gift it to you. Your brother can gift it to you. The money can be all gift.
Which is shocking. And then if I don't have that, I just have to either have the money myself already, where, you have money, you might just not have thought you have the amount of money needed to own a 4-unit property.
Right.
Or it's just time to start today.
Right.
Start today with your savings plan so that you're buying one of these in a year or in 2 years.
Right.
That's amazing.
Yes.
That's absolutely amazing. So bring us back to the average San Diego, $500,000 home, San Diego County, FHA. What does this mean for my payment?
It's going to drop your payment by about $100 to $150 a month.
And how much purchasing power does that translate to roughly? In rough terms.
Let's call it probably $25,000 to $50,000 more.
It's amazing. So, and not that I even have to step up and buy all that. I just, the better yet, and actually what I would advocate, what you'd advocate, is keep the extra $100 or $150 in your pocket.
Correct.
Actually, start putting that $100 or $150 away in a savings account where that starts to accrue, and maybe you supplement it with a little bit extra from work. Just pinch a little bit off work, add that to it as well. And all of a sudden, you're saving $200, $300, $400 a month, which by end of the year, you're looking at
a lot of money.
You're looking at working upwards of $5,000 by the end of next year, $10,000. That might be 3.5% to get your next property.
Exactly.
And you really are building.
You have to sell. You can't have 2 FHA loans at the same time.
Oh, got it. So that's great. Look, this is why we have Todd. If you have a mortgage-related question,
sorry,
you call
Don't mean
in.
to pop the bubble.
Here's the number. It's 800-676-2420. When you call in, you just say, put me straight through to Todd. 800-676-2420. Again, when you call in, you just say, put me straight through to Todd. That's Todd Pianin of Home Street Bank. And you talk to him. You talk one-on-one. You literally get on the private line with him and figure out exactly what it looks like, whether you're buying or refinancing. And right now we're spending a lot of time talking about, more entry-level property, median price point property. This is also the guy that funded, I'm not going to name names, but who funded deals for NFL players at a multi-million-dollar level that we've done in the past and that he's been the lender for. So it doesn't matter what your situation is. Call, find out, get more. But here's the biggest and best thing that's going on today is that we're releasing tickets early to the San Diego home selling workshops. Last time through, packed house, unbelievable video testimony.
Both sessions were packed. It was unreal.
It was phenomenal, and it's been requested back, the 9th edition. It's coming up February 1st, coming up out of the break. You're going to learn how to get free tickets. But if you want a quick shortcut and you're not patient for us to come out of break, you can also visit SanDiegoWorkshops.com. It's the one and only place where you get the entire 5-day Blitz marketing program, bullet by bullet. You're listening to Daniel Beer of the Beer Home Team, Todd Pianin of Home Street Bank. That's coming up next. Hey, here we are with you, Real Estate Exposed, Dan Beer, Todd Pianin, and we have the last segment of our sad Goodbye Charger Sunday episode. But we learned in the last segment that there is excellent news coming out of the FHA lending market. Todd Pianin, you shared that with us.
Yep.
We've also been looking at just the tremendous amount of expired and canceled listings, failed listings, in other words, that we've seen, not just all of last year, over 13,000 properties, but this year, already 573 year to date, just in these first 2 weeks. It's, over $1 billion in failed sales.
So can I ask a question? So do you think that how many of these failed, these 500 or 13,000 last year, were in what you and I like to refer to as bad marriages? Because meaning that they hired a realtor, signed a 6-month listing agreement, and as you'll learn at the San Diego workshops, you can get tickets at SanDiegoWorkshops.com. Dan, your team doesn't do that. You guys, if I don't like you, I could fire you tomorrow. right? I could fire you.
So a lot of those people are stuck in, well, like you say, a bad marriage.
Yep.
They're with an agent that either got recommended to them from, somebody they knew.
Their friend.
Because people like to recommend what's familiar,
Right.
despite the fact that person may or may not have performed at peak level. There's just a familiarity bias. They might have also worked with someone they felt obligated to, a family member, a cousin, a hairdresser, whoever it might be. And I'll always tell you this: if you tried selling your home with a relative, and now it expired, it came off the market, and you're thinking, well, I'm going to go and sell my home with that person again. You can't possibly expect a different result if you're going to be doing the same thing. And if it's somebody that you feel cares about you, then maybe they care enough about you to have you explore your options. Just simply to explore how do you, what else could what does it look like to work with a professional? I mean, as straight as I can't say that any straighter.
I guess the number I would look at basically is you got 13,000 people. If I were to have heart surgery, I'm going to try to get the best heart surgeon on the planet to do my heart surgery. I mean, that means if that was a heart surgeon's deal, that means you picked a heart surgeon that 25%, Dan, of his patients or her patients died. I mean, that's one way to look at it, right? That's a pretty sad way of looking at it, but somebody picked somebody to represent their property that was not...
That's the truth, man. That's the truth.
I mean, 25% of their patients died. And one of the great things about the San Diego...
Thank God those aren't the repercussions from a failed real estate sale.
It's repercussions. It could ruin somebody's retirement. And
Your finances die. Your future could die.
It ruins your kid's possibility of maybe going to college. It could remove...
Without a question. And what really gets to me is a lot of those people actually stayed in those relationships with their agent because they were stuck because they've signed these long-term agreements. These agreements that are typically 6 months out.
What's the methodology? What's the methodology?
The methodology, my man.
Thank you very much. Behind a realtor wanting to sign somebody up for that length of time, because I mean, I would think that if a property isn't sold, I mean, what's the average marketing time in San Diego County right now? 25 days.
It's in the range of 30.
Okay, so 25 or 30 days. So if the property hasn't sold, and let's just call it 90 days, why even as a realtor would you want to stay in that marriage?
I personally wouldn't, but to give you some context, the majority of real estate listings in San Diego County are signed for a 6-month period. That's the most common time frame. Now, the way the California listing agreement works is it's heavily favored in the direction of the agent, meaning that you're completely stuck with them. Once you sign, you're done. You're stuck. You are in that relationship for the term of the contract, regardless of if you're happy or not. There's no happiness clause in the contract. Okay, so you're stuck with this person.
Right.
If they're performing, if they're not, if they're communicating, if they're not, regardless of what your experience is, you're stuck. And you might, after you don't need 60, 70, 90 days to find out and figure out, like, hey,
stuck? What do you mean you're stuck?
This isn't working. You don't need 60, 70, 80, 90 days to know that. You know that much earlier, but you're stuck. What do I mean you're stuck?
Yeah, I can't call their manager and say I want to cancel my contract.
No, you are legally bound to the contract. They have to release you on their own will. Now, I could give you all the reasons why I think that's absolute lunacy as a business practice,
right,
as an agent. Because why on earth would you ever want to have that kind of relationship with somebody? Why would you want to build ill will in the marketplace? But
before you go down that path, I have a question. Did you used to sign those contracts?
Sorry, say that again.
In the beginning, did you sign those 6-month contracts, those listing contracts?
Oh yeah, that's what I was taught to do. Like that, that's what you're taught to do.
So when the first time you said, I'm going to give you the 1 second out clause or whatever.
Well, I haven't described that yet. So what we do to heal this process is we have what we call a minute-to-minute listing agreement. But again,
the first time you took that listing contract on the minute-to-minute listing, how uncomfortable were you?
I wasn't at all.
Why?
Because I would always have let somebody out of a contract they didn't want to be in. I just simply started putting it in writing and alleviating people's fear. But again,
okay,
so many people are stuck in bad relationships with their agent. Not in that they're not necessarily adversarial relationships, but it's a non-performing relationship. And you are stuck. Why won't an agent let you out typically, despite how absolute, it's pure lunacy to keep you trapped? Well, because you're one of their only listings. You represent their hope for a sale. Remember, the average agent in San Diego County sells 4 homes a year. You are very important. That sign in your yard is a very important billboard. It's a very important lead generating opportunity for that agent. They need you to stick around, and they won't let you out, or they'll charge you some kind of fee. What we do to alleviate that is simply put in writing that you can cancel at any time for any reason and without penalty. Why not put our performance in writing? You have to be happy or you have to be free. It's the only way in which to logically go through a real estate transaction. You're listening to Real Estate Exposed, Daniel Beer, the Beer Home Team, Todd Pianin, Home Street Bank. Remember, the home selling workshops are coming. Your tickets are free as our listeners, and they are located at SanDiegoWorkshops.com. The date is February 1st. We hope to see you there so you can learn how to use buyer psychology in your favor to create a negotiating advantage. I am looking forward to that. Todd
Pianin, Home Street Bank, a member of the FDIC, equal housing lender, NMLS ID number 304014. Have a wonderful weekend. Have a great Martin Luther King Day. See you next week.